time, we have at least one activist investor with some thoughts on Alphabet, and David Faber's back at Post 9 on that, David.
Yeah, you know, it's funny. I heard a rumor about a very large, well-regarded activist coming after a very large technology company, and I think we've received that news this morning in the form of a letter from TCI Fund Management. This is about a $30 billion or so activist fund that many people may remember. Of course, remember the TCI Fund Management is the Children's Fund Management. Chris Hahn runs that. You can see what's happening to Alphabet shares as a result of this letter. In it, he says that the fund owns shares valued at more than $6 billion, reflecting what they say is a strong conviction in Alphabet's future. But they go on, Carl, to say a number of different things, that despite strong revenue growth, operating leverage has been minimal over the last 5 years. Total expenses growing 18% year over year just in the last quarter that was reported, while revenues were only up 6%. Of course, we've discussed this as well. But they go on to make a number of different recommendations, I guess, is what you'd have to say. Headcount, they say, is too high. Conversations with former executives suggest the business could be operated more effectively with significantly fewer employees. They go on to say that they actually agree with Brad Gerstner from Altimeter Capital. Remember when he sent that letter a few weeks back to Meta, saying the same thing, that Silicon Valley simply has, many of the companies there simply have too many people and could achieve revenues with far fewer people. Go on to also point out that they would like them to establish an EBIT margin target, should establish and publicly disclose an EBIT margin target for the Google Services segment. Believe that target of at least 40% is reasonable. And also talking about compensation per employee being too high, paying some of the highest salaries in Silicon Valley, median compensation about $295,000 in 2021. So it does appear, Carl, a number of different things they're going after here. Reduce the losses in other bets. Share buyback should be increased. Compensation per employee is too high. You're hiring too many people, and you need an EBIT margin target.
And Alphabet, David, is still hiring. That's the key here. There's no freeze. Remember, they hired nearly 13,000 employees last quarter, and the management said that they were going to hire about half of that in the current quarter. That's still about, what, like 6,000 employees plus potentially? So what this letter is saying is that stop hiring altogether and start cutting. In terms of its other bets, right, this is a unit that I talk about often because it's still losing a lot of money, but it's thought that all the money from the ad business is able to pay for that. That's been under scrutiny for quite a while. I think it lost, about $1/3 billion in the last quarter. Things like Verily and Waymo. Was there anything about Waymo in the letter? It has long thought that maybe this unit should be spun off. It's had a lot of success in that autonomous driving, seen as the leader here, but still with the larger Alphabet. Every quarter I ask Ruth Porat, the CFO, if any of those businesses are on the cutting table. She didn't say no the past quarter. She said there'd be more detail. They're focusing. But I wonder if this letter, if you've been able to see yet so far, David, I know you just got it, if any of those other businesses are sort of on the chopping block in terms of what the activist investors think they should do.
In fact, they are. Here's a quote from the letter. The biggest component of other bets, as you just pointed out, Deirdre, is Waymo. Unfortunately, and I'm reading from the letter here, enthusiasm for self-driving cars has collapsed and competitors have exited the market. Ford and Volkswagen recently decided to shut down their self-driving car venture, saying we've looked at this every way you can and we just see the profitability a long way out. TCI going on to say Waymo has not justified its excessive investment and its losses should be reduced dramatically. So, yeah, Deirdre, you're dead on that one. Pointing out other bets has generated only $3 billion of cumulative revenues over the last 5 years, but incurred a $20 billion operating loss over that same period. Of course, very important to point out here, this is still a controlled company, right? So you can be an influential activist investor. You can have a lot of a cohesive or comprehensive argument here, but it doesn't mean necessarily, Deirdre, that they're going to listen to you.
Yep. Still
that
Sergey
said,
and Larry.
Mark Zuckerberg did decide to cut 13% of Meta's staff, even though, of course, as we pointed out many times, he controls that company as well.